Morning, Steve Reed with the morning grain comments. We've got beans up 8 cents, corn's up 3, wheat's up 10 cents. Stock market is higher, dollar is a little bit higher while crude's lower. I think we're following this little stock market rebound in the grains more than anything else. As far as weather is concerned, it's pretty interesting when you look globally about forecasts for the next 2 weeks. U.S., Midwest, Southern Plains will be drier and warmer than normal, which will help corn and soybean plantings. But North Dakota continues to be wet, and so does Eastern Canada. Europe's dry, the Middle East is dry, North Africa is drying, but only Morocco has been affected by the dryness. The rest of the crops there are getting into harvest. India, Pakistan, Bangladesh are all drier. Argentina and Brazil is dry. So when you look at global maps, it's somewhat unprecedented to see so many areas dry. As far as the numbers are concerned that the USDA put out yesterday, the soybean export numbers were 1753 million bushels. That's down 20%. Soybean planting is 12% versus 41 last year, 41 last week versus 8 last week, 39 last year, and 24 average. Illinois is 11 versus 55, Iowa 7 versus 64, Minnesota 2 versus 59. With the USDA numbers, we're going to see if they lower South American soybean crops 5 million tons. The key will be USDA's 22-23 U.S. soybean export guess. The number could be as high as 2750, which would be a negative carryout, and at the outlook conference they used a number of 2150. The yuan is at the 18-month low. April China soybean imports 8 million tons. It's down 6%. Season to date is 51 million tons, and they're on a pace to do 93 million tons versus USDA's 96. Over in the corn, exports 1496, down 16%. We've got 22% of the crop planted versus 8 last week, 64 last year, 50 average. Illinois 15 versus 71, Iowa 14 versus 84, Minnesota 9 versus 81. Many people think USDA will keep their corn carry at 181 versus crop analysts is 177, and we'll see if they lower the Brazil crop and lower Ukraine exports because of the war in Ukraine. USDA raised winter wheat ratings from 27 to 29 versus 49 last year. We would expect this dry pattern to stress the hard red winter wheat crop. Hard red spring plantings 27 versus 47 average. North Dakota's only 8. And we'll see what the USDA does in their export numbers with how they handle the Black Sea wheat exports next year. Jeffries did come out and say commodity prices should rally due to lower supplies, but are concerned that China's lockdown, slower U.S. economy, EU recession could temper that, how much we rally, how quick. Crude oil has been down 6%. U.S. dollar is up to the 20-year high. All these things, plus the lower equity, has weighed on the grain prices. These are my thoughts, not those of ADM. Hope that everybody has a positive trading day.